Alright, what's good, guys? So we're gonna go over to Hoonicator, right? That's the name of the indicator that we have decided, that I have decided. Um, so first off the bat, you can see a few things that we have visually. We have just days from the ICT, and we have the ICT kill zones for the session highs and lows, and just marking out the sessions in general. You can change these settings in the settings, obviously down here. You can change it however you want, and that's the end of it. Then you have your midnight open as well, or true day open, as some people call it. And we also have these, which I should enable. So I'm gonna enable these real quick. These are just for me. It marks out the times where I should be trading or I shouldn't be trading. Makes it easier. Um, yeah, but anything down here, TFO down, is just basically the implementation of the ICT kill zones indicator that is already made. I just took it, cut it in half, took what we needed, what I needed at least, and basically just copied and pasted. Right? Then right. So we have all those. You can look at more sessions if you want, but just looking at this screen, right? So we'll go over what everything means on the screen, and then we'll go into the settings. So let's get this out the way. Now, first things first, top right, you have your win, loss, break even, and your win rate up here that you can update in the settings. It's just number based. It's not like money based. So if you go break even, it'll still count it as a loss. But for us, we count that as a win, obviously. And then now we have this fib look back suggestion, right? So this is going to be crucial, but you don't want to rely on it too much because it's just AI generated. So it won't give you a perfect amount. So you might miss entries. Yeah, you might miss entries because this number here, you'll go into your settings based off of this or based off market and change the look back setting that I'll show you to fit the need, right? And I'll show you examples of it. Now, we have our levels. So we have the 1 hour levels that pop up right here, and we have the 4 hour levels that pop up here. Green and blue indicating whether to buy or sell, obviously based on bias, but usually these higher time frames are more likely to pass through. So say for example this 4 hour and how it goes through, that if you just bought immediately at 4 hours, you would need a big stop loss because you get stopped with our 50 ticks right here. We would still get stopped out. So you just want to go, if it does pass it and it shows some type of rejection, you could go in closer and you could do a manual fib. So we have a break of this high, or not really. We don't really have a break of that high. There's no real retracement here, really. You could go off based off order blocks or a rejection block. So technically, if we draw an order block here, right, or right here, because technically it breaks above here, you could enter off these wicks because it respects the order block, or something like that, some along those terms, right? Um, Besides that, you see these circles and X's on your your um your chart now. These just indicate fake sweeps or real sweeps. So if you see a fake sweep indicator right here, this is a fake sweep of a 1 hour high that's indicating. So you would want to look for shorts because a fake sweep is just it sweeping liquidity, pulling back for the actual move, and then it or does a, let's say, and then it comes back. So a sweeps liquidity comes back into the range, pulls back into our OTE range around this area for shorts. So this just indicates that, right? Now based on time, like here, obviously you wouldn't get into shorts here. You would look for longs, but just based on that, you could look for pullbacks, like a fake sweep here. It goes down. There's a pullback here. You could take shorts here. It's just based off fake sweeps and real sweeps. It's like, if you don't understand fake sweeps and real sweeps and how to trade them, then it's whatever. But there's also a rejection block that's made here, right? And it respects it, so you could have got in shorts from this, right? So that's basically everything that you see on the screen. We'll go to the main 1 minute levels. So these are all entries, green indicating longs, right? And red indicating shorts, right? So obviously you don't want to just blindly take shorts and blindly take longs off of these levels, because they won't work. They only work with your bias and your draw on liquidity. If your draw on liquidity is lower and you see a pullback into our level, take that short, risk it, right? If you get stopped out, it probably wanted to go to a higher level, right? But yeah, that's the basic premise of those 1 minute levels. And if you still don't know how we trade off pullbacks. Market is moving up, sweeps low, sweeps high, right? But market is moving up. We're waiting on that pullback to our OTE range, our 618, for longs. We're not looking for our pullback into here to go short. We're not looking for that, right? We're looking for that pullback for longs, because usually when it does the pullback, it wants to go even further, right? So you'll make more profit that way. Or you have, and you will have a less likely of getting stopped out, right? Because if you end up taking a trade off a fair value gap, right? Fair value gap, and then your stop loss is like right here or something, right? You could take this, and then it'll go up, right? But then it'll come back and stop you out. It didn't go up, right? That's the way I see it. But yeah, it's based off bias, and with this strategy, it's just easier to understand that if you do lose, then it's because your drawn liquidity was wrong, or your bias was wrong and it wanted higher or lower. Or you just entered it in at the wrong time because there was either news or some type of market open that happens that stops you out. Okay. Now that we've went over the basics of how these work, I'm going to go in depth on the settings. All right. So like I said before, we have this journal. It's connected to this optimization alert, which shows our look back suggestion. There should have been a thing that I added, but I guess it didn't add it. Let me see real quick. Um, okay, let me see if I can update this. This is a historical version. Oh, maybe we have an old one. Okay. Let me pull up the new one. How do I look for my scripts? Let's go. Let's go here, here. Here. Okay. Art. Let's see if this is a new one. Okay, here we go. This is the right one. Okay, now my settings are messed up, so I'm gonna quickly edit these real quick. Alright, we're back. Changing my settings to exactly how I like it, right? If you want my settings, I'll paste it in if you guys ask me. But I'll just quickly go through it. Right? And then this is how my chart looks. Right. Okay. Now, the only settings you should copy for real are either, or not either. Just make sure you copy for the higher time frame. You want to make sure your HTF look back is at 10, right? So that's these. 10 is the most optimal that I've seen. If you increase it or decrease it, it gets a little wonky. See, if you increase it, it just gets a little weird, right? So just leave that at 10. Basic premise is that look back, it just gets basically the 10 candles back or the 20 candles back or 5 candles back to make our fib range. Now, keeping that in mind, we're looking at this. This is only for this top one. I moved it up here so you guys can see it. The fibs pivot look back. Now this is for the 1 minute only, I believe. But I will give you an example. I'm gonna remove all SMTs. Keep our order blocks, and we'll do that. Okay. Now, here's what I want you guys to know. Just combine everything. Fake sweep here. All right. So it creates this order block. Right. So let's go here. Let's go bar for bar. If you don't know beforehand, this creates an order block, right? I don't know why it's not popping up. Maybe it doesn't pop up immediately. But okay, we'll just mark it ourselves that this is an order block. right? Our order block. And now you might be wondering, our fibs are down here, right? We're in a very volatile time because we're in New York AM. So what I've noticed is that you don't follow this suggestion for this one at least, and you change it to 5. Right? You change it to 5. I'm gonna go set the bar a little bit back. Now that you have it set at 5, you're gonna see that a level actually pops up here. It goes slow, so you guys can see it. Here's our level, right? It pops up, and what do you do with that level? You mark that level out. I'll just mark it out myself because I know where it is. So here's our level that it created, right? And we go ahead and delete that. And basically, we take our cells. Now, if you didn't change your pivot amount, that level would never pop up. But you can still get in this trade based off order blocks and this fake sweep indicator, right? So here's our thing with 50 ticks, and I'm just gonna put a buy stop up here, right? And since we already took London high, this one we would aim for London low, right? But if you did make the whole fib yourself, right, from the manipulation side, we could look at everything that it creates, or we could even take it down to this 4-hour buy side one, right? So we could do that, and we could just set our buy stop down here, right? This you would obviously do. You would put your buy side here, or your buy limit here, so you could get out at Asia lows. But let's go ahead and play this bar for bar, right? And let's go ahead and play it. Obviously, you wouldn't go with this amount of contracts, obviously. But you get the gist, right? You get the gist. There it is, right? You get the gist of how basically the indicator works, right? And it also indicates a fake sweep here. So you would want to get out of that trade and actually look for longs now. And look at that, longs. Right? And you could use this as your hour confluence, this 4-hour. So you could have just took buys here. But you get what I mean. And then you could journal this, obviously. Our win-win. Boom. And it updates it. Now, like I said, if you don't change this, and you're not vigilant in changing it before New York, you won't get like good entries. It'll start bouncing back and forth like you guys seen. But yeah, we'll go ahead and I'll show you that really quickly. If I go get rid of this, so if we go back and we have our pivot at 20, right? We never get a fib up here. right? We get fibs down here. That's because it's taking the last 20 candles for the range, which isn't optimal, right? Now, if we go back over here, right, we could do the exact same thing. Market open. Let's do 5. Right, I'm gonna change the amount we see down a little bit so you don't get overwhelmed by how much you're seeing. But yeah, okay. So we have our levels, and we have a buy level here that you could have took in. We have a buy level here that doesn't get hit. I know that. We get another one here. I don't think this one gets hit either. So let's go ahead and switch pivots. Let's see if it gives us a better entry. I believe this one actually doesn't. We have an entry here. We could try, but I don't think that hits. So let's go back to here. This is our 7 o'clock. So 7 o'clock induces a little bit of volatility. Let's go back. We have a buy zone here that we could try to take. Longs off. Our SL is 250. We don't get stopped out. Actually, we don't get stopped out. And we aim for 206. All right. Now you see this fake sweep. You might get scared, but once it hits our $500 target, you just go break even. Right? Anytime you get scared of a trade, just go break even. No matter what. Just go break even. We're at our target for that, 250, and boom. There's our win. Now, Asia keeps on climbing and climbing and climbing, as you see. So I'm trying to figure out our optimal fib look back settings for that. But this fib does get hit right here. Now that I just looked at that, I think this one gets hit. Oh, it doesn't. Okay. Well, you basically get the gist of how pivots work. The pivot look back, how it works. So that's basically just all I wanted to go over. Because with the right pivot, you could find the right... It basically cuts down the amount of candles it uses for the range, making it so it would look like you're drawing the fibs yourself. Right? Like this. Like you're drawing the fibs yourself. Right? But yeah, with a higher pivot, it's basically... The higher the pivot, the more choppy price action. The lower the pivot, the more volatility is in the market. That's why you want to change the pivot amount lower to accommodate for volatility in the market. Right. But yeah. Basically, the rundown of the indicator. Wonder if you could have took longs off here. Yeah, you definitely could have took longs off that. 200 ticks. And look at that. Even with true day open. You could have took a long off true day open if your target was higher, which would be here, um, or even this New York AM session high, and that gets tapped. Right. So that's how you would trade the indicator that I've given you guys. Hopefully this helps a lot, because I'm gonna be using it like crazy. I ultimately made it for myself, but I'm giving it to you guys now. So do what with it with what you will.